A credit line for businesses can be one of the most powerful financial tools an entrepreneur or business owner can access. Whether you're launching a startup or managing a growing enterprise, having access to flexible funding can make all the difference. A business line of credit offers exactly that, an ongoing source of working capital that you can tap into when you need it, and only pay interest on what you use. It's especially helpful for managing cash flow, covering unexpected expenses, seizing opportunities quickly, and smoothing out the seasonal ups and downs that so many businesses face. A small business line of credit is typically a revolving credit account, similar to a credit card, but designed specifically to meet the operational needs of a business. The lender approves a set credit limit, and the business can draw from those funds at any time, repay what was used, and borrow again as needed. This makes it an ideal solution for businesses that have fluctuating income, unpredictable expenses, or simply want to keep a safety net in place. Unlike a term loan, which provides a lump sum with fixed repayments, a small business line of credit gives you the freedom to use funds when you need them, how you need them, and in the exact amount required. Business owners often use a line of credit to cover payroll during slow periods, purchase inventory ahead of a busy season, pay vendors on time, or even invest in marketing efforts. The flexibility of a business line of credit allows companies to stay agile and make financial decisions that support growth without taking on long-term debt that might not align with their immediate goals. This kind of credit is especially useful for businesses in industries with seasonal demand, such as retail, construction, or tourism, where expenses remain constant but revenue can vary month to month. Accessing a business line of credit is usually faster and simpler than applying for a traditional business loan. Many banks, credit unions, and online lenders offer streamlined application processes. In many cases, you can apply online and receive a decision within a few business days. Some lenders even offer same-day approval and funding for qualified businesses. While terms and eligibility requirements vary depending on the lender, most will consider factors like your credit score, time in business, annual revenue, and cash flow. For a small business line of credit, having solid bookkeeping and a clear financial history can go a long way in helping you qualify. One of the major benefits of using a business line of credit over other types of financing is that you're not locked into a large debt obligation. You can borrow only what you need and pay it back quickly to reduce interest costs. Most lines of credit are revolving, which means your available credit replenishes as you repay your balance. This gives you long-term access to funds without the need to reapply each time you need money. It also gives you the opportunity to build your business's credit profile, as consistent use and timely payments can boost your business credit score and open up even better financing opportunities in the future. Another key advantage of a small business line of credit is that it can help you respond to emergencies or take advantage of time-sensitive opportunities. Let's say a vendor offers you a significant discount for purchasing inventory in bulk, but the offer expires in 48 hours. Or maybe a piece of vital equipment breaks down, and you need to replace it immediately to keep your operations running. In these cases, having a business line of credit available allows you to act quickly, without having to go through the time-consuming process of applying for a traditional loan. It provides peace of mind, knowing that funding is available when and where you need it most. There are different types of business lines of credit, including secured and unsecured options. A secured line of credit typically requires collateral, such as business assets, equipment, or accounts receivable. This reduces the lender's risk and may result in higher credit limits and lower interest rates. On the other hand, an unsecured business line of credit does not require collateral, but you may need to provide a personal guarantee or demonstrate strong financials to qualify. Interest rates on unsecured lines may be slightly higher, but they're still a good option for many businesses that need access to quick cash without tying up assets. It's also worth noting that a business line of credit is not just for struggling businesses. In fact, many financially healthy companies maintain a line of credit to manage working capital efficiently and strategically. It allows them to take calculated risks, pursue growth, and maintain a buffer against uncertainty. Whether you're funding a new product launch, expanding into a new market, or covering short-term expenses while waiting for customer payments, a business line of credit is a versatile tool that can support virtually every stage of your business lifecycle. Interest rates on a business line of credit vary depending on your lender, your creditworthiness, and market conditions. Rates may be fixed or variable, and there may be additional fees, such as annual fees, draw fees, or maintenance fees. That's why it's important to read the terms carefully and compare offers from different lenders. Make sure you understand the repayment schedule, how interest is calculated, and what happens if you miss a payment or exceed your limit. Responsible use of a business line of credit can enhance your financial reputation and provide the flexibility you need to manage and grow your business effectively. Technology has made it easier than ever to manage a business line of credit. Many lenders offer online dashboards where you can check your balance, request funds, make payments, and track your activity in real time. This digital access gives you greater control over your financing and allows for more informed decision-making. Automated alerts and reminders help you stay on top of your repayments and avoid unnecessary fees. Some platforms even integrate with accounting software, streamlining your financial management and reporting processes. While a business line of credit is an incredibly useful tool, it should be used responsibly. Just like any form of credit, it's easy to fall into the trap of relying on borrowed funds too often. Always borrow with a clear plan for repayment, and make sure your use of the credit aligns with your business goals. A line of credit should support your operations and growth, not create additional financial strain. When used wisely, it becomes a strategic asset that can elevate your business and provide stability during uncertain times. It's also a good idea to periodically review your credit line terms and usage. As your business grows, your financing needs may change. You might qualify for a higher credit limit or better interest rate. Keeping an open dialogue with your lender and regularly updating your financial records can help ensure that your credit line continues to meet your needs effectively. Many businesses begin with a small business line of credit and eventually move on to larger, more sophisticated financing solutions as they scale. That's why starting early and building a strong credit profile can pay dividends over time. Ultimately, a small business line of credit provides more than just funding. It offers flexibility, security, and the ability to stay agile in a constantly changing business environment. It empowers entrepreneurs to make smart, timely decisions that drive success and sustainability. Whether you need to bridge cash flow gaps, invest in growth, or manage the unexpected, a business line of credit is one of the smartest financial tools at your disposal. Take the time to research your options, understand your terms, and choose a lender that aligns with your values and your vision for the future. A well-managed credit line is not just a financial product, it's a key part of your business strategy. A private credit line for businesses is a flexible financing solution that gives companies access to working capital without the constraints of a traditional loan. Unlike a term loan that delivers a lump sum with fixed payments, a private credit line allows business owners to draw funds as needed, repay them, and draw again, offering ongoing access to capital. This kind of funding is ideal for managing cash flow, covering unexpected expenses, purchasing inventory, or seizing new opportunities. Whether you're a growing startup or an established enterprise, having a private credit line in place can be the difference between reacting to challenges and staying ahead of them. One of the key benefits of a private credit line is its flexibility. You only pay interest on the funds you use, not on the entire approved amount. That means you're not taking on unnecessary debt, and you can manage your expenses more strategically. The approval process is also typically faster and more personalized than with traditional lenders. Private credit providers evaluate your business based on revenue, cash flow, and growth potential rather than relying solely on credit scores or collateral. This makes private credit lines accessible even to businesses that might not qualify for a bank loan. Another major advantage is that private lenders often offer customized terms, higher limits, and more responsive support. Whether you need short-term funding to bridge payroll or long-term capital for expansion, a private credit line adapts to your business's evolving needs. In today's fast-moving market, agility matters. A private credit line empowers you to move quickly, make confident decisions, and keep your business growing. It's not just a safety net, it's a strategic tool that gives you control over your finances and the freedom to scale on your terms.